Good morning, everybody, and welcome to today's episode of Derek Invests. I'm your host, Derek Miller. I have done a live video already this morning based on what's going on in the stock market, so I wanted to address Bitcoin. Should you be buying Bitcoin? Well, the first thing you need to ask yourself is, should you have ever been buying Bitcoin? Do you understand what it is? And if you do, and you say, hey, I'm a buyer, are you a hodler? Do you believe in hodl? If you believe in hodl, I would say that right now is not a great time for Bitcoin, simply because you plan on holding forever. From the way I understand it, I don't believe in that methodology at all. I own crypto as part of my overall portfolio. And as I stated back in, I don't know, a couple months ago when the ETF came out and volume shot through the roof in Bitcoin, and it shot through the roof up at 68,000. I told you that I'm a seller and I sold out, and I still am. I'm still out until this morning. I'm going to go over with you, for those of you that actually manage your assets the way you should. Um, let's get into it. Let's talk about crypto. Okay. And the reason I'm talking about Bitcoin is because Bitcoin is actually the gold standard. And when I say the gold standard, those of you that follow me and watch my live stream on Friday know why Bitcoin is the gold standard, because Bitcoin is going to be the standard by which currencies in the crypto market are based. At least that is my belief system. That's what I believe. Bitcoin is a property. It is not a currency. So I believe that the property of Bitcoin is going to be the gold standard of our current fiat system. Used to have the gold standard. I believe that is what Bitcoin will be, is the gold standard for those cryptocurrencies to actually transact business in. So should you be a buyer of Bitcoin? Well, if you're caught right now with your pants down, if this is a terrifying moment, first thing to do is calm down. The first thing you do is take a breath, okay? And you admit to yourself where you may have gone wrong. Maybe you just got a little too excited. You had a little FOMO, fear of missing out. And now what's happening is pain receptors are going off everywhere. And you're imagining the worst case possible fallout from these coins getting hit, because if Bitcoin's getting hit by 20, some of those shit coins are getting hit by 80, and I know it. So the first rule you just learned about investing, if you own those shit coins, is money easily gotten is money easily given back. And Bitcoin has displayed this before, but never in this manner, because right now we are way over leveraged in all markets. Trend following has become a disease. People believe that AI and machine and algorithms are the way to actually place, invest, and trade their money, which is absolutely absurd. Those algorithms, machines, whatever, are going to pile on to whatever direction the market's going, which is really scary for days like today, because does the possibility exist that everybody decides, oh, look, this is a market you short in, and they dogpile on? It's a possibility. Do I think that that is going on right now? No, it doesn't appear to be going on. So the first thing you do is you calm down. The second thing you do is you do an evaluation of Bitcoin in a proper manner. The first thing is, when there's any sort of global economic event that would cause even something like crypto to crash, you have to look at the major markets of the world. For you crypto guys out there, if you're not watching the S&P 500 and the NASDAQ, you're making a huge mistake. This is where many of the major players in the crypto world, for example, in your world, have a lot of their money and a ton of vested interest. Okay. I know that the goal of crypto is someday to replace the current system with the crypto system. I'm not telling you that's not going to happen, but that's going to take generations. That's not happening overnight. So they are still very steeped in our current reality, and they're steeped in what they believe to be our future reality. And I think that it probably is as well. However, that doesn't negate the fact that because those two markets they're in fact correlated because of that fact. So it doesn't negate the fact that that being unaware of what's going on in the S&P and the NASDAQ will directly affect crypto. If you're unaware of that, you're blindly unaware of that, because basically the crypto market now is just the riskiest asset class on the planet. And that is a fact. I can show you I can show you proof after proof after proof that is the riskiest asset on the planet right now that's actually being managed professionally. So, first thing, calm down. If you're caught in this trade, This sucks. Pain sucks. It's awful. All right. It doesn't mean it's over. But let's take a look at Bitcoin. Is this some sort of a crash? Is this going to end? The crypto world is going to end Bitcoin. What does that look like? Well, the best way to know what that looks like is to look at traditional markets and then say, hey, do these crypto markets have anything in common? Because most of the major players here are the major players there. So let's go ahead and do that. I'm gonna share my screen with you here real quickly. All right, now this is Bitcoin. Well, I have up a daily chart at the moment, but what we are going to do is we're going to go ahead and jump over to the S&P because that's what I want you to see. All right. So I'm going to zoom out a little bit so we can get a good picture. See how ugly it is over there as well. Now, the numbers don't add up, right? I mean, like, let's face it, down 20%, down 3.5% are two different worlds. And if you think, hey, I can handle more risk than those stock market guys, that is a foolish way of thinking about investments. There is no ego in investments. And being down 20% is a terrible, terrible mistake that could have been and should have been hedged. Let's just be honest. Now, let's go take a look at what the last global economic crisis was, and that's all the way back in 2008. So we're going to scroll back. We're going to take a look at 2008, and what we're going to look for, what we want to do is we want to prove, if we can, that right now is like 2008. Even though I've told you that it is not, let's go take a look and let's just see how do they compare? How does today's market in crypto compare with a true global economic event? So we'll go back to say, where are we now? 06? Okay, that's fine. Here we are in 06. Down here at the bottom is volume, everybody. Up. This is your volume, okay? Why does volume matter? Volume, my friends, is the indication of institution, the people that run the world, institution, the big money guys, when they get highly active in any market, whether it's Bitcoin, S&P, NASDAQ, small caps, U.S. Treasuries, when they get active, it's identifiable because they can't hide their footprint. Their footprint is these huge pieces of volume, this massive level of trading activity. So let's go back, and we're now looking at, this is May of 06. Where are we at here? July of 06. Let's scroll forward. All right. Here we go. There's 07. Look at the spike in volume. This is where the big guys, that's February of 2007, by the way. That is a year and a half before the September of 08 crash, okay? Look at the spike in volume there compared to what's behind it. All right, I'll put a horizontal line there. This is average volume behind that 07 mark. Look what volume does, and it stays there. You see that? It stays elevated. And watch this. Boom. Now, you are in July of 07. This is still 07. Okay, this is still 07. See the trading activity? That was the previous trading activity. This is 07 trading activity. Huh, both of them wiped off the map. Look at that. August of 07. Look at the volume, everybody. That's 08. This is what it looks like during a global economic event. Okay? Volume goes through the roof. Why? Is it just we're not looking at moving averages here, which shift at all times. What we're looking at is volume, trading activity, how many people are involved. The only people that can make volume go from where this blue line is to this are the big boys, the guys that run the world, the institutional financiers, if you will. Okay? And look at the difference. This is not like a tiny piece of market data. Look at this. Go all the way back. Look at that. This is years. This is what? January of 06. I can take this all the way back to 99, and this will work all the way back to the 80s. Look at that. Look at the level of volume that's increased. Again, this is 06, 05, 04, 03, all the way back, average volume levels. This is the global economic crash that occurred, okay? So let's zoom in today for Bitcoin, and let's take a look at what Bitcoin looks like. So we're going to go over here, Bitcoin. And if people were bailing out of Bitcoin in droves, especially people that run the Bitcoin market, we should be able to find something in volume that signifies a massive shift in participation or a lack of participation. So what I want to do is I'm going to zoom out just a little bit to give you a broader picture. Here we go. This takes you back to 2020, okay? Because this is futures. Here's 2021. Here's 2022. Is there anywhere on this chart that stands out? I would say right here does. Look at that. That's the big guys. This is the big guys. Does anything stand out right now? No, it does not. So when you have a giant gap down, and I hope you're familiar with what gaps are, because your market, not yours, but the crypto market moves very, very similar to the stock market now because they have the same players in them. See that big gap? Right there, that big hole right there. See that? That gap, and especially a gap down from highs, is an indicator of fear. So that is used to drive fear into a market. That is used to dump markets. It's very easy to do in Bitcoin right now because whether you like to accept it or not, the Bitcoin market is very, very small on a global scale. All of the crypto market is very, very small on a global scale. And there's very few people running those markets. And this is typical market manipulation. This is a gap down to institute a ton of fear, which would lead me to believe that right now, I would say, well, this is no fun and you have every right to be afraid. And if you've gotten yourself over leveraged in Bitcoin, or Bitcoin is the only asset you're trading, or crypto is the only asset you're trading, you're making a huge mistake. This should not be the only asset you trade under any circumstance. This is one asset of many. For example, if you own the treasuries right now and you had bought them when I was buying them, the 20-year treasury, their ETF TLT at 91.80, you can check me out. If you had bought that right now, this wouldn't feel quite as bad, right? Because that's up 10% in the last week. You're also getting 4% interest. So this 17.5% drop really would feel more like a 3% drop to your portfolio. And that's only if you own those two things, right? It doesn't matter. Properly managing money means owning different asset classes. Crypto is one asset class. Now, where should crypto have a bounce? Where should Bitcoin have a bounce? Well, if you are just your standard operating kind of market guy, it should be right in here. It should be around 48,000, okay? Which it came close to this morning. Where did it get to? The low was 49,365. If you're a guy like me who is not greedy, you know that if you're not a hodler, which I am not, I do not hodl anything, okay? That is for suckers and billionaires. If you're not a billionaire and you're not a sucker, you shouldn't be hodling. That will just get your money eaten up, gobble, 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 every time. Oh, I don't care. I have held Bitcoin from 2,000 to 20,000, and it came back to 2,000, and then it went to 70,000, and I will keep holding. You have missed so much opportunity. It is unbelievable, and it's opportunity that's easily managed. So that is a mistake. So let's talk about it. Is Bitcoin in a crisis right now? It doesn't appear so, no. It does not appear that Bitcoin is in a crisis right now. I wanted to show you that so you knew, because these asset classes are all related. If you think that the crypto world and the traditional financial world are not completely intertwined at this point, you're missing the boat, because they are. That is going to be a new system. I do believe it will take the place of our current system, but I also believe it's going to take generations. So it's a system you should be in, but you need to be managing money outside of that crypto world as well. And if you were managing money outside that crypto world, and you were following the three pillars of investing: cash management, risk management, and investment management. Investments are, what investment should you own right now? This right here is pillar number one. And right now, what you should have been owning was 20-year treasuries. You should have been shorting oil. You should have been shorting the S&P and the NASDAQ through Friday. Right now, you should be a buyer, right? As far as crypto goes, what should you have been doing? You should have sold out when it was at 70,000. Now it's at 50. You should be scaling back in. Now, look, when I say buying, that just means the investments how you buy those investments, you have cash management and risk management. Cash management is how much of your cash are you putting into those investments and how much do you have on hand. I personally had over 50% on hand coming into this, right? So that's your cash management. And then your risk management is how much of this am I buying? So do you build positions to a 10%, to a 20%, and you should not exceed 20% in any given position. Some guys, if they're index traders, will go to 25% positions, which is totally fine if you're just an index trader. So, but if you don't know what I'm talking about right now, and you're not managing money that way, I have a mentorship course starting in 2 weeks. Okay. I have a mentorship course starting in 2 weeks that teaches this stuff. All right. You wouldn't have got caught with your pants down today. Today would not feel nearly as ugly as it probably does. So should I buy Bitcoin? The answer for me personally is yes. For me personally, yes. And then how much is based on who you are. What is your cash management? How much cash do you have on hand? What is your investment management? Are you spread out? Do you own treasuries? Are you short oil? Were you short the markets through Friday? I covered all those positions Friday. Hey, today would have been a nice profitable day for shorts, but I didn't hold them anymore. I sold them on Friday. Oh, well, but now I'm a buyer, and that's risk management. So how much of those are you buying? What size positions do you build? Me personally, I build my positions out to either a 10% position or a 25% position at a time, depending on what it is. For me, my treasury position is a 25% position. It's all bought in. I am going to be selling off portions of that position today. And I'm going to be buying into, so I spread out my investments through the stock market and through the crypto market. I only participate in Bitcoin in the crypto market. And so today is definitely a buying opportunity for me. I have been sitting out for a little over 6 weeks now. I mean, I got out around 68,000. So I will start buying in today. I know I showed you that gap. That is what I'll personally be looking for, because I do realize that there is the distinct possibility in the cloud over Bitcoin that as it is more widely accepted, the government, the powers that be, will completely want to take it over. And if you drop Bitcoin's price down to say 8,000, that'll take out the profitability of the miners. They can then come in and potentially buy the mining companies if they're not wealthy enough to hold out. People can only hold out for so long, folks. I know that's hard to believe, but the fact of the matter is, in 2008, Goldman Sachs had to borrow money from Warren Buffett so it didn't go under. Goldman Sachs had to borrow money from Warren Buffett so that it didn't go under out of existence. Okay? So if you think those miners can hold on indefinitely, you're wrong, which means there is always that undercurrent or overcurrent or whatever you call it. So I'm very cautious in the crypto world. I hope this helped you. I am starting my mentorship, as I said, in a couple of weeks. And if you are interested in that mentorship, here is my Twitter handle, Derek Me 752-636-05. That's my Twitter handle. You can jump on there, read a little bit about it. I am on LinkedIn as the Honest Trader. Also, my email is dmiller@prometheaninvesting.com. You can get in touch with me there. My direct Gmail email account is millerderek091@gmail. You can email me there as well. Thank you so much for joining me. I hope you enjoyed this. If you have questions, please get in touch. Be honest with yourself, everybody. Don't sit there and say you're going to hodl. That is not a way to manage investments. It's not a way to manage your life. It's not a way to manage investments. All right? Like, it's not a way to manage your future. I'm sorry, I said investments twice. Remember, all right, you didn't fail today if you're in a bad spot. This is an ugly, mean learning lesson. And as part of the curve, I've been doing this for 25 years. I lost my account 3 times over. My whole account 3 times over, learning how to do this stuff. That was over a decade. So if you've been doing this for 4 years in what is amounted to nothing but a bull market, and this was a wake-up call, use it as a wake-up call. All right? Hey, listen, remember, if you're not good up here, you're not good anywhere. Get outside, see the sun today, smile. You may have to fake this hard today, right? But if you do, fake it. Fake it until it becomes real, all right? And don't lie to yourself. That's the key to success in life, is honesty with yourself. Be honest about how you got in this position. And if you need the help, I have a mentorship starting. Look at it. Join it. This didn't have to be an ugly day for you. This can be a profit. This could have been a very profitable day for you. Remember that. And that's not being braggadocious. That is just 25 years of experience in actually managing money, right? I'm just not a futures guy. I'm just not an options guy. I'm just not a this guy or a that guy, right? I manage an overall portfolio that takes advantage of taxation. It takes advantage of investments. I'm conscious of risk management, cash management, all things that the traditional financial brokers do not do and have no idea how to do. And right now, they're just telling everybody, no one saw this coming. Nobody did. And if your broker is saying that to you right now, or your advisor saying that to you, that is untrue. Okay. So thank you so much for joining me. Remember, every day